Hey, everybody. Welcome to our very first virtual lunch and learn without lunch. So
Just
we
learning.
hope you enjoy it. We hope you maybe watch this during lunch. But I'm really happy to have Ryan Green here with us from RMS Mortgage Services. And you have sent me several questions over the past week or so that I thought would be really good questions to ask of Ryan. So, Ryan, welcome.
Thank you. Good morning. How are you?
And we're going to start out by asking probably a question you're getting asked all the time. Let's talk a little bit about rates. I saw your message this morning, but talk a little bit about rates and where you think rates are headed through the end of the year.
Yeah, there's a lot of speculation on it, but there's a lot of experts that are saying that it should be they should be roughly where under 3% until 2021, and then they're gonna reevaluate then. But they believe that the rates are gonna be where they are right now. 30-year mortgage rates under 3%, 15-year rates very low as well, 2.5 and under for conventional. The market and forecast for mortgage interest rates are going to remain strong throughout the end of the year, from what I understand. So,
Wow, that's unbelievable. Did you ever imagine you would see a rate under three?
no, not at all. So during the crash, there were rates that were kind of similar. They were able to do some things as far as helping people with their mortgages when people were struggling and kind of doing some creative things with interest rates. But I mean, that was when the economy was terrible, and now we're talking about things being a little bit better now, but rates being below that time frame. I never would have thought that it would ever have been below where they were during the crash at all. So, I mean, even this time last year and a year and a half ago, rates were almost 5% for a lot of people, actually. And now we're talking about being in the 2% range. So it's kind of a crazy time, but it's
Wow.
really want to be buying homes.
Crazy indeed, especially coming from a market 30 years ago. That was prehistoric, by the way. 30 years ago, when I was selling homes in double digit rates. I think
Right.
they were 18 at one point in time, and never thought I'd see the single digit again, and certainly didn't think I would see three. So that's
Right.
really amazing. So, Ryan, can you tell me a little bit about maybe a comparison for rates between like a conventional loan, an FHA loan, and a VA?
Yeah, they're all actually pretty similar at this point. They're not too far off from each other. I know that the FHA and VA loans, they can be about 2.5% for 30-year as opposed to the conventional. But some of the conventional loans, I was saying before as well, I've seen rates at 2.77. So we're down to almost the same rates even on conventional with the government. Generally, the government loans are a lot better than conventional rates, actually. So they've kind of balanced out. And I'm assuming that's because it's hard to get lower than where they're at for people to still be making a profit. So they're kind of squeezing margins to be able to get as low as where they're at. But anyways, they're all together kind of in that same range. So if we can go conventional, I'm really trying to keep people in the conventional realm, but sometimes it makes a lot more sense to do an FHA loan for a borrower. And the rates are a little bit better in that range as well. So I mean, it's definitely a good thing. So like I said, so the rates really between 2.5 and 2.75% for the rates on all of those types of loans. So
Okay, great. Have you seen any major changes to qualifications for any of the loan types, Ryan?
yeah, with COVID-19, there's actually been a lot of changes with qualifications as far as people that are not premier credit, like 700 and above, have been dealing with some, I guess you could call them hurdles when it comes to being able to get approved for loans at this point. The FHA guidelines had changed with many lenders, VA as well, and that had to do with credit scores. Credit scores used to be able to go down into the 500s for both of those government loans, and a lot of lenders had changed their guidelines to 660 credit score and higher, which is significantly different than somebody that's in the 500 range. So those people were struggling. Some people we're even pushing it over 700 on those type of credit scores. So that's definitely something on the buying perspective that people potentially that were able to buy in January weren't able to buy then in February. So it was a difficult time, and it still is kind of like that. But they're pulling back. The lenders are pulling back those guidelines a little bit here and there. I just had one that was only doing cash out refinances for people that had a 720 or higher credit score,
Wow.
which is A+ type credit, right? They just got rid of that guideline yesterday, actually. So now they're back to their normal lending practices. So things are slowly back to normal when it comes to the credit scores and the different guidelines that they're using for that type of stuff. So.
Okay, good to know. Really
Yeah.
good to know, because these are questions that people have, and even though we're not loan officers, I think we need to know at least the basics here, because it's really important as people start to make some major decisions here. Do you see it, Ryan, taking longer than usual to close a loan today?
Yeah, things are taking a little bit longer. They're with the added guidelines from COVID as well. There are some things that they're doing at the closing table, doing verification of employments, like all the way down to the day of closing.
Wow.
Which is pretty outrageous. But they have to do what they have to do in the event that somebody gets laid off when it comes to COVID-19. So there have been things that are causing big delays as a result of that. And the lenders also have had issues with their own employment people as well. So if they've had to lay people off, now they have less staff to be able to do things. That has happened with some of the lenders. And then also working virtually has caused some hiccups with them being able to get things done on time or in a timely manner. So things have taken longer for a lot of different lenders, but I still have a couple lenders that are doing things still in a couple of weeks, 3 weeks, and when it comes to closing and stuff like that. So there are some good lenders out there, but most lenders seem to be struggling a little bit with their turn times and timeframes at this point as far as closing goes.
So if you were to recommend to somebody, what should I put on an agreement of sale for length of time to close? What would you suggest would be a good number?
I would say 30 days would be a good number for the lenders that I'm working with right now. So I generally could say, 21 days if you really need to make a good offer. But just because of the climate that we're in right now, I would say 30 days.
Sure.
I would actually say most of the other people that are out there right now as well, 30 days might be a stretch for them to even be able to put on a contract if they're using the wrong lender. So it's always good to get the second opinion scenario, because I know the turn times that are going on with the different lenders that we have. And if you need something done in 30 days or less, and it's going to cost your client 1/8% more, I mean, it may make sense at that point for them to do that if it's like a $10 difference in payment per month. Wow. And guarantee a closing in 30 days, right? So it could be important. We got to analyze it from all angles to see what's going on with the transaction and go from there.
Okay, great. And quite frankly, it's a great lead-in question to the next question I was asked, and that's about second opinions. The question was, so does it really make a difference? And what are we seeing, and what's Ryan really been able to do? So I'll let you take that one.
Well, I have specific examples that I get all the time, really. When I get those referrals from people and I ask them for a loan estimate, I basically do that apples to apples comparison to see what the lender that they're talking to is offering them, and then I can figure out what I can do for them kind of based off of that, or just giving them the best possible thing that we have to offer. That being said, I recently had somebody that was doing a refinance that was getting a rate that I could offer for $4,000 less than what they were paying in points, actually. So what that meant was that their loan amount on this refinance was going to be $4,000 less right off the bat. Wow. Just because the fees were that significantly less. So same interest rate that they were getting, but it was going to cost them $4,000 less, which is amazing to save them that much money. So and I have an investor that I was doing a refinance for as well. He was talking to his lender that he's been using for years, and he was going to need to bring about $12,000 to the table because of the cost of the rate that he was trying to get. And that was like a 4.125%. And I got him a 3.5, and he was only bringing $800 to the table for it. So saving him like $10,000, and the interest rate is going to save him probably about $20,000 over the as well. So there's a massive difference when it comes to that type of stuff. So it may seem minuscule when you're looking at a 3.25 versus a 3.5. Like that's just the surface of what we're looking at. But when you really break down the numbers, we can save people tens of thousands of dollars when it comes down to it. So if I can show that to the client, and the agent was the one that told me to talk to them, or told them to talk to me, they become the hero in that scenario. And they get praise for days when it comes to those clients. I mean, they thank them endlessly as a result of saving them that much money. So it's really spectacular, to be honest with you. So I always recommend it no matter what. And if I can't beat it, and they actually are getting one of the best rates, and they're not paying those fees, then it's just peace of mind for them to know that they're getting a great scenario with the lender that they're currently with as well. So,
wow. And this message has been brought to you by RMS Mortgage Services. Wow. If I'm a big believer in second opinions, and
right.
I've talked about that a lot. And honestly, guys, if we're not taking a look at least offering the ability to do a second opinion, I just don't think we're doing our job. I'm sorry, that's my soapbox statement for the day, but let's give Ryan an opportunity here, because story after story after story tells us that second opinions actually work. And I can tell you, if that second opinion works for one of your customers or clients, you're going to be gold. And for the next transaction or for the next referral. So kind of remember that. Okay, more soapbox than I wanted to give Ryan, but I can't help myself when it comes to second opinions. So.
Well, I appreciate that very much. Clients do too, so that's very good.
Ryan, do you have anything else that you'd like to talk about, or some information you'd like to share with us before we leave for today?
I've added a couple new lenders recently as well, so we're expanding our reach when it comes to being able to give quotes. And we're not stuck with one or two lenders, which is very good as far as being able to help with those second opinions and saving people money. So we are still expanding in that area. Some of our secondary type lending companies, who are the ones that would be more of people that are doing bank statement loans, they don't have traditional credit, those type of people. Those people are starting to come back into the marketplace as well. They had been kind of sitting on the sidelines for a while because of the risk factor. They're starting to come back and lower some of their standards again as well. So we can start looking at them again, which is very good. So I'm happy to report on that, because we were definitely missing out on some business as a result of that type of stuff. So keep that in mind. If you guys have any investors that are trying to buy some stuff and they don't really want to show any income, we have those products available again for them. They just need to have their cash down payments. So that's what we're looking for in those scenarios. But other than that, if anybody wants to hit the golf course, I'm open to doing so. We have some RMS golf tournament stuff going on. So let's do that stuff. We can get out there and play. Out there, give me a call, and we can network on the nines out there. It'll be fun.
It sounds like a good plan to me, Ryan. Hey, thank you, buddy, for being with us today. Thanks for doing the Lunch and Learn. Lots of great information, everybody. You have any questions, send them to Ryan. If you have any customers that need a second opinion, send them to Ryan. I think it just works well if we start thinking about the RMS Elite Complete team. So having said all of that, thanks for being with us. Ryan, thank you again. And guys, we'll see you next time. It's Ryan and Lloyd signing out. Take care.